Yo, good morning, gang. Good morning. Another day, another dollar. It is Tuesday, October 18th, and welcome back to another morning prep video. For anybody who is a returning viewer, thank you once again. Appreciate it. All support, all love, all hate. I don't give all of it. All of it's appreciated. If you guys are new to the channel, man, welcome to the channel where we do a little bit of a pre-market analysis. Go over some of the levels that I'm watching today, and then talk about some possible trade ideas, right? So if that sounds like something you'd be interested in, man, go ahead and stick around. If not, all good, no harm, no foul. You have a good one. All right. So yeah, let's get right into it. With all that being said, man, let's just jump right into the video. Now, you know what I did forget to say? I hope you guys are all feeling great, good, wonderful, all that good stuff, right? So, anyways, yeah. So, let's get right into it. Now, if you guys watched yesterday's video, I definitely mentioned how I didn't want to sound like a tape recorder, right? I didn't want to keep talking about this yellow range, this yellow box that I have here, this range that we're stuck in. But unfortunately, once again, I kind of have to talk about it a little bit more, right? In yesterday's video, I specifically said while trading in this range, it's just like a coin flip to me, right? In my opinion, you can be as bullish as you want and still have to expect this to drop, right? Because it's just while we're in this yellow box, it's a coin flip, right? And then I even said, right, if we look, we were like down here somewhere, and I was just thinking, I was like, look, guys, I wouldn't even be surprised if we went from the bottom of this range around here all the way back up to the top. And look where we're at, right? Pre-market, post-market, we're opening on a gap up. You guys will see that on the smaller time frames. But yeah, we're now up and over the top of that range, right? Which we've been through this, right? We broke down, didn't work, went all the way back to the top, broke above, didn't work, came all the way back to the bottom, broke below, didn't work, all the way back to the top. You know what I'm saying? This is what I mean by or what I meant by saying I didn't want to sound like a tape recorder, right? We've been talking about this range and kind of what to do around this range for like what seems like a month now. And honestly, all I gotta say now, if you see us in this yellow range, if you see us in this box right here that I have, right, and I'll just give you the numbers here. The top of the box being at like 37, 32, and then the bottom of the range being 36, 22, right? So it's just about 100 points, right? Let me just confirm that here. Yeah, a little over 100 points. In this range, just be open to anything, right? Bullish, bearish, just play the price, play whatever price is doing. Um, this right now, what we're looking at today, if you had to ask me, um, can be a bit of a could be a fake out, right? I mean, I don't know. Like I said, in my opinion, whilst we're trading around this box and even up and out of this box, I no longer trust the breakout or anything like that. I need to see this breakout, hold, and then maybe even get above this right here. We want to see us get above like 38.20s or so, just to kind of have a little more confidence that we're done being in this range, right? Me personally, do not think that's gonna happen. If you had to ask me, if you ask me, this would be fake. This is a fake out, some kind of trap or something like that. Bulls are, they stepped in and they can, continue to push price up during the post market, pre market, and all that stuff. Even though the CPI numbers or PPI, inflation's still bad, the numbers were bad. Even though the overall economy and whatnot is still not doing well, we're supposed to be running up, and this run up is supposed to continue. Yeah, I don't know. Not too confident about that. So, in my opinion, this is kind of going to be another one of these right here. Look above and fail. You know what I'm saying? So, that's just that. We'll see. There's really nothing else I have much to say about this, guys. Like I said, the whole tape recorder thing, right? Tread carefully while we're around this, right? This can still be a look above and fail. This can be a breakout, and this can keep going, right? We'll never know. We're just gonna have to wait till today ends, and then keep watching during the week, right? But in my opinion, this is like a breakout and fail, just like it was right here, solely because inflation and all that stuff is still really bad, right? I don't see any reason why this should just keep running up, right? Just don't see the reason, but could be wrong. We'll see. All right. So let's drop down to. It's gonna do 4 hour, but I'm gonna change this from 360 days to 180, and then we'll zoom in a little here. See what we got on the 4 hour. All right. All right, so we talked about how we had this downtrend, you know, from here to here. Then we had a slight uptrend where we thought one was, you know, getting ready to start, right? Low, high, higher low, higher high, and then it didn't work, right? This is one of those look above and fails out of this range that we were watching, right? We even got a pullback that used this as support and then ran up, right? It was looking pretty. It was looking like this was, you know, we was going to go ahead and get away from this range, right? And then right back into it, right back to the bottom, right? So again, it's happened before. Don't let this get you too excited too early, right? Now, what do we have right here though? So we have what looks like, so we have all this sideways right here. Then this is on the CPI, right? Then we get the reversal, then we get half of it given back, and then yesterday all of it just kind of runs back up, right? All this down that we had ran back up, you know, a little bit pre-market, post-market, and then during the market, and then even post-market, pre-market today. So this rundown is 100% retraced. Now we're chilling right here at the top of the range. We used the top of that range as a little bit of support. You can tell right here, right? We ran up. We get this red guy come in, starts coming down, bounces off the top, and then we run back up, right? That's just that's a little bullish. Of course, that's a good sign. That looks nice. We're using the top of this range as support. That's kind of what we want to see, right? So let's see if we can keep that going. There are, I do believe, two gaps below us, and we'll see those in the again when I go down in the smaller time frame here. So it's not looking. Let's see. Hold on. Excuse me. But it's looking like to me personally so far we're going to drop and fill these gaps right now. That's just what I'm expecting. That I didn't see any price or anything like that suggest that or anything. You know, it's just I'll show you guys, and then it's just I'll kind of go over why. That's just my thought process, right? Overall, I'm bearish. You know what I'm saying? I know that this looks crazy. This looks bullish. You know, yesterday was a big run up. The gap fill or the gap up today this morning, you know, confirms that the bulls are here. They were here yesterday. They kept running it after hours. You know what I'm saying? Can confirm that, or it could be a big trap. Just remember that. All right. So yeah. So I mean, we're looking decent on the 4 hours. That's not too bad. It's gonna go over, and we're gonna skip the hourly. We're gonna go down to right here, and we're just gonna get right into some of the levels that we're gonna be watching today. Boom, pre-market, and there you have it. All right. Once again, for anybody who's new to the channel, we ask ourselves 3 questions every morning. And the reason we ask these questions is because we want to know if there's going to be any possibility for a trade at the opening bell, right at 9:30, right? So we ask ourselves these 3 questions, and based on those 3 questions, we'll kind of have a gist of if we do or if we don't have a possibility, right? So let me go over those, and then let me move this. Actually, looks like we got a new overnight high. All right. So yeah, let's get right into the 3 questions. Question number 1 is, where is price currently trading, right, compared to yesterday's range? So we have right here yesterday's high of day, yesterday's low of day. Draw a little box right there, and you can clearly see we're trading way above where the range was yesterday, right? So question number 1 essentially is telling us we have a gap up, right? We closed right here. We're opening up here. All this in between now is a gap. All this right here. Where's yesterday's high? Right there. So this is a gap, right? So we have our gap rules. Actually, I'll talk about those at the end of the 3 questions, right? So question number 1, we have a gap up, okay? Question number 2, let me get rid of this box right here. I'm going to leave the oval there, though. Question number 2 is, where are we in comparison to the overnight levels, right? The overnight range, right? So here's our overnight high. Drop that down to the overnight low right here. And we are clearly at the very top of the overnight levels, right? I just had to adjust that and actually move it a little higher. So that's given us a more bullish sentiment, obviously more bullish than bearish. We're opening at the top of the overnights and even just making new overnight highs as we're talking, right? So there you go. That question number 2 is at the top of the overnight high. We're right up there. So we'll get into why that's important, right? And then, yeah, let's get into question number 3. We'll get into why that's important. Trust me, I'll explain the 3 questions, guys. Question number 3 would be, we take where we closed yesterday. So I'm just gonna draw this line in. I'm gonna paint. I'm gonna change that to blue. And basically, what you want to do is you want to get where you closed at on the prior day, and then establish how much time was spent above the closing print and how much time was spent below. So this was fairly easy. 100% of the time we spent above the overnight or the close yesterday, right? So that is also bullish, right? These bulls stepped in post market, pre market, and just kept running price up. So oh, didn't want that. There we go. All right. So what do we do with the three questions? What do they mean? Why do we ask them? And yeah, how do they help us determine if we can go ahead and get into a trade when the market opens, right? So question number one: where are we in comparison to the range of yesterday, right? Where are we? Where's price trading at right now? If you were to compare it to yesterday's range, well, we're opening in a gap up. And what does that mean? For anybody who went long or short right here, if you opened up a position right here, whether you were long or short, you've got something to do when the bell rings this morning, right? If you went long, you're a happy camper. You did your thing. You got some money. You're either going to take profits. You're going to add to a winning position. You're going to do what you do, but you've got something to do, right? If you opened up a position last night and it was a call or a long, you're up today. That's what we're getting from this, right? So the action that person, those people who went long, and even the people who went short, almost more importantly, the people who went short. If you went short right here, when you wake up right here, you're hurting. You know what I'm saying? So you might want to get rid of your position. You might want to, hope that this kind of, goes down a little bit. Maybe you can get closer to break even. But either way, if the people who start to sell immediately when we open right here, be it people taking profits or shorts, people who got in short right here getting out for a loss, these people selling is going to start to push price down. And that gives us, obviously that gives us a chance to ride that wave down with them. You know what I'm saying? So that's what question number one gives us, right? There is a gap up or a gap down, meaning people are going to open their computer, they're going to sit down, and if they opened a position the prior day, then they've got something to do today, whether they're big winners or big losers, right? So that's question number one. Hope that explains why we asked that and what that means. Now, because question number one is a gap up, and let me clear my throat here for a second. Hold on. Take a little sip of coffee. All right. So, because we're opening in a gap up, then question number two gives us a little bit of a idea of a play, actually, right? If we're opening up here by the overnight high, right, we know that people who went long here, went short right here, right, they're gonna have something to do when the bell rings, when we open, right? Let's say that everyone who went short right here starts selling and they want to get out, right? And we open, let's say right here, I'm just gonna put this price line right here. I'm gonna change that to orange, and let's just assume that's where we open, right? The people that start selling, right, let's say the price starts to go down a little bit and these guys start to sell, they were wrong. People who went long here even start to sell, take some profit. As price starts to come down, we have this gap right here that we want to go ahead and fill, right? Now that's the gap up, right? Question number one shows that we are opening on a gap up. So we have this gap right here. We have gap rules that we want to apply, right? This gap is either A, going to get filled all the way to the downside, or B, partially filled, right? We might come down just halfway through this gap, and then we start to come back up. Or C, we just close the whole gap. Or I'm sorry, that was one. C, the gap doesn't get closed at all, right? Those are like three of the scenarios that we be watching for when we have this gap, right? So if you were to want to apply or get into a short right here, right, because you're expecting all these people who went short or long here, as price starts to come down, they're going to get stopped out, you know what I'm saying? As price starts to come down, the closer we are to the overnight high, when this starts to happen, this is going to be your stop loss, right? Essentially, we want to be opening pretty much as close to the overnight high as we could while we're dealing with a gap up, because that's going to be our stop loss, right? We're waiting to see if price is going to do something like this, right? Kind of go up the overnight high, maybe fail up there, do a little trading sideways or whatever, then start to come down. As price starts to come down, you can go ahead and get in your short, knowing that the overnight high failed. We've had all this run up. The overnight high failed. The buyers are not here anymore. They're not strong enough to keep running price up. And therefore, as we run down, there's no structure right here. All this was done, pre-market, post-market. There's no resistance. You know what I'm saying? This should, in theory, get closed, or at least partially closed, right? We're dealing with let me just see how big the gap is here. All right, we're dealing with a 70-point gap, right? So, yeah, I mean, I would at least try to get a partial fill here if this starts to go down for the short side, right? So that is why we want to be at our overnight high or overnight low if we were opening on a gap down. I hope that that was something you were able to understand. Just remember, the closer we are to the overnight high, the better your stop loss is, the better the risk reward, right? Let me just kind of give you a scenario where it wouldn't be as pretty. What if we open down here today? Right, price starts to come down a little bit and we open right here. Well, price goes up just a tad, fails, starts to come back down, and starts to come through the opening print. You want to initiate a short around here. Where's going to be your stop, right? It could be the high of day, but what if price did something like open, kind of go right here, do something like this, oh, okay, well, it's not going to do that, right? Go up and then starts to come down, right? So is your stop loss right here. You get in at 37.40, stop loss at 37.64 or whatever. You know what I'm saying? Just doesn't look as pretty. It isn't as good as a ratio, right? So just understand, you want us to be real close to the overnight high, because the plan here is for the overnight high to fail. Once the overnight high fails, you can initiate your short. That's your stop. Good to go, right? So I hope that was something you were able to understand. Sorry if it wasn't. I tried explaining it pretty well. Question number 3. Where is price, or how much time was spent above yesterday's close? How much time was spent below? This one's also pretty significant. We know that because 100% was spent above, that is 100% net long. We know that all the inventory post-market, pre-market today has been net long. People going long here. People went long here. Kind of, maybe we trickled down a little bit. More people added longs here. Who knows? But anyways, anyone who added longs around here, especially like let's say up here, they've got the worst positioning, right? If the market opens and trickles down just a little bit, these guys are the first ones out. They got in long right here. They realized that they failed pretty quickly, so they get out. Them getting out causes like a snowball effect, right? They get out, but price goes down a little bit. People who went long like around here, maybe they get out, price keeps going down. And that is essentially how we target the gap fill. That's kind of like why we, at least why I, quote, expect the gap to get filled, right? All these longs getting squeezed out. They're all getting we have to move this up a little bit. Well, I'll just wait, because who knows, that probably can keep going. But yeah, we essentially just want to ride that snowball all the way down, right? So that's question number 3. We know that all the inventory is net long, so if price starts to come down, these guys all start to realize they were wrong. They all start to sell, and we should continue the gap fill to the bottom. So once again, hope those 3 questions were understandable, and I hope that I was able to explain why we asked them and how we used them, so that you could understand it. All right, I hope so. If not, shoot me a DM, let me know, and we can go over it together a little more. I myself can for sure learn a little bit more, you know what I'm saying, and I will. So anyways, let's get into some of the play ideas. I mean, I kind of just talked about most of them. When we're dealing with a gap, we either have, like I said, play 1, a gap fill. So we fail up here, start to come back down, and then just fill this entire gap, right? Not saying that's going to happen. Remember, that is a 70-point gap. But honestly, with the volatility that we've been dealing with lately, I wouldn't even doubt it. Honestly, I just, we're at the top of the box. So let me just change this real quick. All right, so yeah, if we get a gap fill, that would just put us right back into that range, right? Come all the way down. Here's the top of the gap. Here's yesterday's high. So this is where the gap gets filled, and we are back in that range. So I 100% do not doubt that happening. Like literally 100%. All right. So that's the possibility. Possibility number 1. Possibility number 2 is, let me just get rid of this trend line. Or did I just duplicate it? Yeah, I did. Possibility number 2 is we get a failure up above the overnight low. We start to come down. We get the partial gap fill or so. We kind of stop, let's say, around here or something. Nowhere specific. you start to get some like sideways trading or whatever, and then price starts to come back up, right? And I kind of messed up all those lines. But what we want to do if that happens, right? If we get somewhere down here, you start seeing some kind of reversal, you know, some kind of like this, and then that happens, we start to come back up. What you want to do is you want to look for a long right there, right? Because we want to think about what should be happening on this gap right here. We should be closing the entire gap. There's lack of structure here. There's lack of volume. As you can see right here, all this is pre-market trading. Look at all these volume bars. I mean, you can see that there's some trading here, but there's obviously a lack of volume here. So we should be able to run through all of this. So if the sellers are not strong enough and are not able to push this all the way down and buyers step in, and then we get a like a reversal signal right here, like I drew like a nice little double bottom or something like that, it's a good opportunity to go long right there, right? Because if these guys were unable to push price all the way down, there's a high probability that the buyers are going to step in and start pushing price right back up, right? So that would be scenario number 2. And then scenario number 3, you get a failure at the overnight highs. You start to kind of come, actually, hold on. If scenario number 1 was the full gap, right? Yep, scenario number 2 was a partial. So scenario number 3 would be kind of like a pause, and then we run up, right? No gap fill. The gap never gets touched. The gap doesn't even get looked at. You know what I'm saying? Just because there's a gap there does not mean it has to get filled, right? So, oh, I'm sorry, excuse me. So 3 scenarios, just to kind of real quick run through them. Scenario 1, the whole gap gets closed. We open, we struggle up here, the entire gap gets closed. Scenario number 2, partial gap, right? We fail up here, start to come down, partially close this gap, and then we get some kind of reversal around here, starts to run back up. And then scenario number 3, the gap never even gets flirted with, never even gets touched. We just open and rip and keep going up, right? Now, if that's the case, you see this little box I have right here, bottom of it around 37.90, top of it around 37.94 or whatever. This would be the overhead resistance that we're targeting, right? And if I just switch this over to the 1 hour, which I do believe I skipped earlier, which I guess here we are, right back to it, right? But if we push over this overnight high, I have this here as resistance just from these prior trading days right here. You know what I'm saying? We had a little bit of a struggle right here, a little bit of struggle right here, used that support in pre-market or post-market, came back down, crushed through it, came back up, used this as resistance. So this is an area that I find a little bit of a significant in terms of being resistance on the way up. So as far as an upside target, excuse me, as far as upside targets go, that is where I would wait for like a stall out or something like that, right? If price opens and we start to run up, watch this area right here, 3780 to 3790, maybe even 3800 even, who knows, might even see that today. I personally, like I told you guys before, I'm kind of leaning bearish, only because with all the bad news and all the inflation and PPI, CPI, all that stuff still being bad, right? We're still in a bad state. And I just do not expect price to keep running up, right? There's just no reason for me to expect for price to keep running up, especially when we've just established that if your only reason to think that this is bullish is because we are now out of this range right here, then that's a big mistake, right? Because you would have fell for that here. You would have fell for that here, thinking that we were gonna break down. You got trapped. You would have fell for this fake break up. You got trapped. You would have fell for this breakdown. You got trapped. So don't get trapped. Don't get married to one. Don't get married to one probability, right? Don't sit here and be like, yeah, I only think this is gonna go up. That's it. I can't think both, right, or whatever. You can think what you want. Just remember, trade what the market gives you. Market don't care what you think. Trade what you see. Play what you see, right? So yeah, that's all I'm gonna be watching for today. I hope that was helpful in some way to somebody, you know what I'm saying? Let me know in the comments what I can improve in. Let me know in the comments what I should talk about more, what I should talk about less, you know what I'm saying? Any of that stuff, for real. Let me know in the Discord, Instagram, anywhere you want. But that'll do it for today's morning prep. And yeah, hope you guys enjoyed that. And of course, if you trade today, I hope you finish today green. But if not, don't even worry about it. The market's always going to be here, and you always got opportunity to go ahead and get your bread back. So with all that being said, you guys enjoy your Tuesday, and I hope you finish today fat green day. All right.